Yo, 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 it's your boy TraderPrad. I'm here. Beautiful Tuesday evening. I almost said morning. Beautiful Tuesday evening. It was a car IPO day. Markets were let's honestly keep it real. We thought it was gonna do nothing going into the FOMC day, which is tomorrow, but they actually moved around quite a bit. We broke the ranges that we were looking at last night on the S&P 500 and the QQQs. They went a little bit to the downside, but they managed to bounce later on and actually end up back in those ranges again. So it's almost like they were prepared to sell off for FOMC, but then FOMC somehow came in and rescued the day itself, which is obviously tomorrow. So we'll see how the expectations of no rate hike will probably move the market up, or is it priced in? Does the market move down? All the possibilities. We'll also go through my trades on the day, how I executed. As you can already see the title down below and the amazing thumbnail that I executed today. The short snipe that we pulled off on the IPO. How could we have traded that better? And all things the stock market related. So welcome to the TraderPrad show. And why don't we get started? Let's see who's actually in the chat right now. I see Greg's in the chat. What's up, Greg? I know you said you're gonna pull up today. Appreciate that. Thank you for coming in. And we also got OJ, who's not the killer. He is in the chat though. Ready to look at some of the stocks that we traded today. So instead of how we usually do, which is show our winners on the day, let's actually start off with our losers on the day. So I started off with a nice little long on CCL. CCL and RCL got a little upgrade on the day. They actually had an amazing range that CCL has been holding on for a while now. So look at this range that CCL has been holding above 1494, and the way it's been holding there for how long now? Since the start of September, I guess you could even say from the start of August. So I was going to lean off of that level and get long. Pre-market shows you strength off of 15. We never really go below 14, so I'm now waiting for the first 5 opening minutes to settle. After the first 5 opening minutes to settle, I'm looking for reasons to get in, which is higher lows, higher highs, and then I was like, okay, you know what? I actually like this trade now. I'm going to take the opening range 5-minute breakout. I take that breakout, never really go too much out of the money. It goes back higher, and now I'm adding. These ads are fine, but what kind of screws me over is this ad over here. Since I added so close to the high of this range, which is 1560 is the high of that range, look at today's high, 1560, right? Since I added so close to 1550, 1560, I felt like I almost could not take profits so soon, and I basically bag held this position all the way through. I add on the dips over here where I see the stock is actually making a lower high and getting ready to go back down. We've seen these patterns before where, you know, they make that initial pump off the open, but then they push back down. And we've been trapped in it before. We should be learning by now not to be trapped up in positions like this. But yeah, we buy the dip, we offload a little bit, we get back in a little bit, we take some profits, basically for flat exits. Honestly, these are flat exits, and the trade over here for the long is done. I try a quick little long again near the pre-market lows. That one fails. I try another long near the low a day, and I just give up on the trade because the trade doesn't work. Now let's dissect as to why the trade didn't work off the catalyst that it had. The catalyst wasn't really that strong of a catalyst. It was something about a random hedge fund called Truist hedge fund, or some sort of a securities fund like that, came out with an upgrade on CCL, and they said, you know, they expect the stock to go higher, 2024 to be better, 2025 to be better. These petri dishes of COVID, which were previously what they were, just cultivating COVID in their ships in the islands, not in the islands, in the oceans and whatnot. But now they're getting upgraded across the board from a lot of companies. So CCL, I thought that catalyst would help it out, and that range, that $15 range, so good, would actually be something behind it and help that stock out. Today, sadly, the stock comes right back to that 15, just settles around that $15 area. But I wouldn't ignore the range, right? The range, the stock, the way it's been holding near this $14.94 to $15, it can give you a beautiful short off that level where you got to drop down to $13-14, or it can give you a beautiful long eventually and push up. So I would keep the stock on the watch list, continue watching it, but sadly a losing trade for us to start off the day with. That was probably one of the first few positions I started getting into. It was actually a winner if you think about it. I could have taken some profits. I got greedy. I saw dollar signs, and yeah, when you get greedy, you pay for it. Now let's go to ARM. ARM actually, I believe, is a flat trade. I started off with the long over here in front of 55. 55, obviously, we know how important of a level that one was. IPO days low was 55, 55. But the next day and the day after that, we basically teetered around this 55 area. It had like around 1,800 lots or maybe more going into today. So was looking for a possible bounce off that 55. Quick little long off of that. I actually end up scalping it up for a winner, but then it comes back down. Then I get chopped up for the short a little bit, but later on I'm actually able to catch the short. I take some profits right before 54, and then I also take the 54 break. I add to the position that I have over here for a possible extension to the downside. The stock immediately gives you a garbage break of 54, and then I have my stop at break even. I say, you know what, this was already flat on the day for me. If I make money on this even trade or this average down trade that I have, then I make money on it. But if it goes through this halfway marker of this Bollinger Band, or even back through my even dollar, through my flat price, I'll just take that flat exit, get out, and be flat on the day. Overall, ARM basically did nothing after that first move. It just traded sideways all day. That $55 level keeps coming back to kind of show strength. I mean, the amount of accumulation that it did around this level would obviously put that price back in play tomorrow, and you have to keep it on watch, right? It's sucks that the volume has been going lower and lower, especially after the IPO day. If we go to the daily chart, you'll see right there how it's been just constantly, steadily just been decreasing. IPO day, 100 million shares. I mean, who saw that one coming? And then ever since, sadly, just going down. Today, Cart's IPO, we thought this one would be monstrous and big and so on, that we spent the whole hour yesterday talking about it. Sadly, this stock was not that great and actually pushed a lot to the downside and gave us a good short eventually, which we'll talk about in a bit. So this was how we played out the ARM IPO today. NIO did a public offering, so because of that public offering, they pushed quite a bit to the downside. You guys know the SSR bounce play. I tried the SSR bounce a couple times, didn't work. Flat trade, didn't lose too much on it. Pretty much lost like $1 or $2, and I'm fine with it. So overall, I mean, we had fun with this position. It could have given us that bounce to VWAP, but the selling was so crazy. And actually, at this point of the day on NIO, I was watching the tape. The tape was insane. I mean, look at that volume. Okay, that's the close. No, that's not the close. Let's go to the 1 minute chart instead, because now you'll see there. So right before the close, we see crazy action happening on the tape. I wish my recording software was actually recording the tape properly, because then I could have showed you the tape. There was a lot of action in this 5-cent range, and the stock was on SSR, short sale restriction. You could not just punch the bids to get into a new short position. The only people who could have punched the bids were people who were already long. So a lot of long orders were just smashed into the bid going into the close over here, and you saw like multiple gateways had 1,000 lots. 1,000 lots are basically 100,000 shares. So multiple gateways had 1,000 lots, and a specific gateway every couple seconds would go from 1,000 lots to 9,600 lots, and go back to 1,000 lots, and go back to 9,600 lots. So the offer would just keep doing some crazy stuff, and the bids, which were thick, they were 1,000 lots too, would just get smashed, move down, the offer would move down with it, the bid would get smashed, the offer would move down with it, the bid would get smashed. Basically the shorts saying, hey, I want to get short, I want to get short, and nobody giving new short entries, and the bids, basically the longs, exiting their positions. So a lot of people exited their positions over here. I mean, the amount of volume being brought in a 1 minute candle, larger than the opening candle itself. Look how much volume the opening candle did, 200,000 shares. that candle over there did 1.6 million, whereas the close didn't even do that much. Usually the close does the most volume on any stock that you look at. Right there, look at that close, brought in the most volume on the day, almost as a lot more than the open actually. And this is Apple. You can pull up any stock at any point and look at the closing volume, and it should technically be the most volume done on that day. And the fact that NIO was doing this kind of crazy volume to the downside, being SSR, was spectacular to watch. I learned a lot of new techniques on how to actually trade this, how to get filled on the position. So I can't wait to try this new techniques and so on. I mean, obviously this will only help for people who have direct market access and able to trade as a prop firm, so no point in even explaining it to you guys. But just if you are able to understand the action and the tape, you are able to even catch the long, because at one point you actually see the bids dying down, the bids getting thicker, the offers actually getting smashed now, meaning new longs entering, and shorts kind of covering, I guess, and this insane pop coming up where you could have just got long and with insane amount of size, kept that risk very tight, a penny or two risk for an insane 5-10 cent pop. You have 10,000 shares. I mean, you can do the math on that one, right? So amazing trades on NIO to the downside today, especially going into the close. A lot of fun action to learn off of, but we need to find some trades on it tomorrow. Today, very flat position for us. Carvana, only one trade on this, and this was actually only the reason I got this trade was because it was called out by my floor manager. He's been trading Carvana quite a bit, so obviously he has alerts for this stock and stuff. I used to trade it when I used to work for Trader TV Live, but I kind of put it off my radar since then. Not sure why. We were looking for this day. If you guys remember, I was talking about this $53 breakout, how we missed out that breakout. But anyways, coming back to today, my manager pointed out this $46 area, that double bottom. I said, you know what? I like it. I'll watch the tape. I'll look for the stock to push down, and it pushed down and popped back up, and I said, okay, I'll punch in the long. Sadly, my long price was way too high, and my manager said, you need to cut it, if you guys get the song reference. So he said, you know, Pratt, you chased up to 50s and 60s. That was a little too much of a chase. I wouldn't really bid more than 30s on this stock. And I was wondering why he said that, but then I kind of understand why. Because if you look the stock at the 5-minute, you see how this candle tail goes down to 46, but most of the trading happens around 35, 36. Most of the trading happens around 41, and then the lowest is $36. Sorry, 36 cents. Most of the liquidity that you can grab, if you're a big boy trader trying to take big boy positions, most of the liquidity that you'll actually get the fills on will be somewhere around over here. So he said, you know, chasing up to the 50s and 60s wasn't a smart idea. And I said, I'm just learning how to trade off of you. So if you think that's the right call, I'm going to punch out. I punched out. But what I should have done is had my orders back at 30s and 40s, which was the right call. I just wasn't sitting at my desk. I was taking a break, waiting for the car IPO, which came in around 12:20, 12:30 or so. So I was just taking a break, doing nothing. But that's a wrong way to think about it, right? You're a trader. Your job is to sit there, take the trades that are being offered, and make the money, because the risk on this is what, 30, 40, 50 cents if it breaks that $46. And if it doesn't break that $46, it goes up to 48, right back to VWAP, which is a $2 move. So 50-cent risk, $2 move. You can do the math on it. Insane risk to reward being offered for not that much hard work. The stock just grinds slowly to the upside, just giving you exits all the way into the close. So these are the type of trades that we want to be looking for. I did have the long, but you know, the price was not right, so we cut it. We just should have been ready to re-enter it. I also did have this line on the stock previously before today. So after seeing that line on my chart, I was a little bit more prepared to get into that position. It just sucks that I didn't trade it right. Winner at the end of the day. Li Auto. This one was basically a sympathy off of NIO, but it doesn't really make sense that I'm trying to sympathize an EV stock that had a public offering by trading another EV stock that's kind of in the same sector and the same country. I knew that at that moment. My manager mentioned that to me. I mean, I knew that at that moment when I was trading, but I just felt like this one would give me a more a cleaner move to the downside because NIO had already made that move in pre-market. I was obviously anticipating. I was not participating. It's just I made a mistake there 100%. So NIO had already made this move in pre-market, and I felt like, the SSR bounce would kind of screw people over on the shorts. Instead, I'm going to go over to Li Auto. If there's any type of sympathy trade to be had, it would be on Li Auto, which was also at a pretty clean level. Look at that level on Li Auto. It's had a top here multiple times and a bottom here multiple times near this 38.20 to 38.50 area. So I figured that's where I want to be continually shorting the stock, 38.50 to 38.60 to 38.20 zones. I'm short. I deleverage a little bit. I get back in, I add, I cover, I get back in, and then eventually I just kind of give up on the trade because I'm seeing NIO make a little bit of bounces and move back up. So I don't want to get trapped in it. Another negative stock on the day for us. So Li Auto, I think this one's actually flat on the day pretty much because our ads, our exits, and flat outs was pretty much flat on the day. Amazon, we had a nice little short on the day over here. Market was ridiculously strong. That's why I gave up on this trade. But I think this trade could have been amazing if the market wasn't as strong. Apple was ridiculously strong, just continuously going to the upside. This was basically, if you go to the 5-minute chart, Amazon, which was a lot weaker on the day today. You can see how weak Amazon was right there. On the 5-minute chart, it was right around $137, which we have a level off previously too, right here from $137 or so. So leaning off of that level, we've seen it show as rejection on the 5-minute chart previously on the day, pushing up to what, 135.57. So going right back to that prices, I take that short, I take that out right near VWAP because I see that the market, S&P 500 and QQQ are just insane rally, and Amazon's carrying those, sorry, Apple's carrying the whole market. So I cut my trade. It was the right decision. If market was going the other direction, that would have been a banger trade. Last but not least, the car IPO, the snipe that we pulled off on the stock. I guess it can be called a snipe because we didn't get the whole meat of the move, but we got the idea and we got something out of it. We first originally started looking long for it. The stock IPO'd at $42. It wasn't really the cleanest of the trades over there. We were looking for tons of things to reasons to go long. There were no bids, absolutely zero bids on this position, and no ask either or no offer either to play off of. So it was pretty hard to look for. The way we played ARM, I could not play this stock the same way. But we took the opening range 5-minute low break, which was basically this 41 area. Took the opening range 5-minute low break, gave us a clean short all the way up to $38. Later on, the stock pulls back, gives you another attempt to get short again at 40, which is the right trade all the way up to 34. I think the stock was supposed to open up at $28 to $30. And it opened up at $42. So clearly very, very high pricing of IPO. And investors probably took exits. Investors taking exits. Anyone who was not in a lockup period and they were invested and they probably had an IPO share price for themselves, pre-IPO, closing round investments and whatever. They probably... Do they have a lockup period? They should. But if they don't, they probably exited because they have a price of $5, $10. Employees probably have price of cents. But lockup period should be for employees for the very least. So at the end of the day, the stock just amazing move to the downside. We just shorted that level. We sniped that level to the short side. We enjoyed it. We loved it. I think another trader on the floor with me had that short too, so that was good. Later on, the main traders, the big boy traders on the floor had that short, which I didn't. I tried a quick little long over here in front of 35. It was actually the re-entry through 35 after 35 broke, but the stock doesn't actually have any buyers and fails to show us any move to the upside. So we take quick little exits. We keep the stock on the profit side for us on the day, and we end the day nice and green or flat, I believe. So pretty much flat. So that was our day over here. Now let's look for opportunities for tomorrow. And obviously tomorrow we have the big boy trade, the FOMC trade. where we are expecting FTX, right? Earnings tomorrow, FTX after hours, where we are expecting point lies. We're expecting a pause coming in on the rate hikes. No interest rates hikes coming in for this current FOMC. At least that's the prediction currently according to CME tool. Let's refresh this page. That is the current prediction coming in from the CME tool. 99% that there will be 0 rate hikes coming in on this FOMC, but maybe one on the 1st of November or the 13th of December. We don't know yet, so we'll have to wait to see how Papa Powell comes out on the podium at 2:30, answers all the questions from the media, and based on his tonality, based on how he answers hawkishly or dovishly, we'll see the markets move again after the initial move of 2 o'clock when the numbers do get announced. So lots of moves to watch out for. This is the level on QQQ that we were actually talking about yesterday. That bottom right there around 369.15. We actually got under it, but then we pop right back above it. So insane reversal on the stock market. Look at that reversal right there. S&P 500 looks pretty similar. We had that line yesterday that we mapped out. That's not the one. This is the line we're looking at that we mapped out. 442.50 area. We get under it, but then we pop right back over it. So it's almost like we negate the whole downside move. But I guess we kind of see the bottom tomorrow in case FOMC does come out positive or negative. Whatever way FOMC comes out, this might just be the bottom tomorrow. It gives you another opportunity to load up long, and then an insane reversal where the market probably goes up above this day or today. We've seen those type of actions come in on the market multiple times. And then on the next day, you'll see it probably reverse right back down. The classic day 2 FOMC reversal. So I'm just throwing out trade ideas, possibilities that could happen. So watch out for that. I think, look at that. And that's exactly the bottom on this day. So it will be almost ridiculous to not point that level out and look out for that level tomorrow when the market actually opens up and starts trading, or when 2 o'clock happens. So these levels over here, we'll quickly map them out, take put some alerts out for ourselves, and see what happens when the market does push to these prices, either before 2 or at 2 or at 2:30. Take a quick break and go back to the chat. Let's see what the chat's looking like. Chat's saying TH number 3. What's up, TH? How you doing, brother? My boy Prad. What's up, CDP? Cody in the house. And TH retracted a message. What'd you retract, TH? What'd you retract? Huh? You were talking shit? All right. We do have a pretty extensive list of stocks that we want to go through. But do we want to go through all these stocks? My new regimen has basically been, trade 2 to 4 stocks and trade them well. Trade 2 to 4 stocks, trade them well. And if you do that, you only need one winning stock and a 3:1 risk to reward ratio to be flat on the day. And if you get more than one winning stock and you have a 3:1 winning ratio or more, you start making money. You keep being consistent that way. You're a consistently profitable trader, where your worst days are flat and your most money-making days where you have all 4 winners or all 5 winners. You are rolling in money in that day. Here's a quick little graphic just to prove to you how that works. So 25% win rate on a 3:1 ratio, you end flat on the day. This blue box indicates where most of the profitable traders belong in with their profit ratio. If you just aim for a 1:1 risk to reward ratio on your trades, where you're risking 50 cents and your reward possibility is only 50 cents because the stock has already moved that much in a ATR that it usually does, an average true range. The stock has already completed 100% of its average true range, and you're risking 50 cents to get 50 cents, a 1:1. And those are the types of trades you're trading. You're not going to last long in this game because you need a 50% win rate. That's not the easiest to get. It's not hard either, but it's not the easiest to get. A lot of the traders usually have like 30, 40% win rate. So Those are the type of boxes you want to be in right here. Even with the 40 to 50% win rate and with 2:5, 2 to 3%, 2 to 3 risk to reward ratios, you still start making money. So aim for that possibilities over there. Really hone in on the right trades. But the way you really hone in on the right trades, though, is by actually going through a long dumbass list of stocks and finding out why stocks are moving, and then kind of creating a swing trade thesis for them, and then trading off of that swing trade thesis on a day trade scale. So this stock over here apparently moved around quite a bit in the after hours, I think. Was it true in the after hours? I guess not after hours, but just today. Was a stock off of here? No, what is GI? Oh, right. GIS has earnings tomorrow pre-market. That's why it's on our watch list. I almost forgot. GIS earnings tomorrow pre-market, and looks like it's been pretty much consolidate stair step down for a little bit. So we have pretty clean levels that we might want to be interested in. Couple ranges that these stocks have played around in, and General Mills, we'll see how their earnings come out. The volume is not bad. 4 million shares on a 10-day. It's not the worst. It could be better. And 5 million shares came in today, so maybe tomorrow we'll see a little bit more volume coming in. But recently, on good earnings reports, they have been selling off for some reason. I mean, that was a good earnings report, they popped. That was a good earnings report, they popped. This one, they missed on the revenue. The EPS, they did beat, but they dropped. I guess something to do with guidance, dropping right back to July 2022 levels. I'm looking for the COVID levels because I always like to look at where stocks are compared to that. So COVID levels are right here, and honestly, they didn't drop too much from COVID levels. 2018 popped up. They didn't really drop too much during COVID, I guess, because General Mills is like food and durables. No matter what happens, people need food, and this one kind of made it through with Walmart and everything else. So this kind of makes sense to me now that I think about it. So yeah, it didn't really drop too much from that range during COVID, popped back up, made those insane ranges, and now coming back to reality, looking for maybe if earnings don't come back, if earnings don't come good tomorrow, possible moves back into these range over the span of a week or two. $60 doesn't seem too far. We're at $65 right now, so $60 doesn't really seem too far out for me. If earnings doesn't come out good, we'll watch out for GIS. If there is a volume in it in pre-market, if it gaps down or if it gaps up, we have levels to play off of on either direction. So for sure, watching this one. Your lucky number is 212. That's the number to 1K subscribers, since you asked when I reacted. Yes, sir. I need them subs, man. I need them subs big time. Please, Lord, help me out. I need them subs and the view time. Thank you. So that one's GIS. Let's go to FDX. Along with the view time, guys, make sure you don't forget to reply to your text messages from your mom. Your mom keeps messaging, and she says that you are not answering the messages. So make sure you reply and do what she's asking you to do. Hit that like, hit that subscribe if you haven't already. FDX. Earnings tomorrow after hours. So after the whole FOMC bonanza, we'll see what comes out with FDX. I mean, I'm expecting good report. People still need to send stuff all across the world. People still buy stuff online from across the world. I'm expecting good results to come out. So we'll see what happens over here on FTX. Didn't UPS recently boost the salary for their drivers and so on? So I mean, I don't know how that matters to FTX overall, but we'll see how this one's earnings comes out. I can't predict anything. I don't have a crystal ball. I can't predict the future. So we'll just have to wait. Obviously in a 52-week high range over here for FTX, currently bouncing off the 100 period EMA. Looks like we're also rejecting by the 50 period. Let me make sure. Yeah, 50 period EMA, and good earnings report possibly moves it right back into these ranges to the high side. Wouldn't be surprised by that. Currently holding up shy by 1 cent at 250. So $250, which was previously a pretty strong level. Look at that rejection of 250, a constant rejection and then breakout. And that was right after earnings too. Earnings move, takes it higher, rejects 250, rejects 250, rejects 250, breaks out higher, comes back down to 250 eventually right before the next earnings report. And I think that kind of dictates the dictates the value of that price. So I think you might want to watch out for 250. Maybe it comes into play tomorrow during intraday. Maybe it comes into play tomorrow after hours when the earnings report actually drops. So would not ignore FTX. Will for sure have this one on the watch list for even the intraday trades. But sadly, not too much of a volume coming in. $200 stock. Probably the liquidity is poo-poo off the open. So maybe just leave it alone until the earnings move actually comes out. But we'll keep it on. We'll see what happens. NIO and Li Auto. So Li Auto, once again, not a real sympathy trade, right? We knew that at that moment. 200 million shares on NIO today. Holy smokes. I didn't even see that. I mean, it did 3 million shares at the last minute of that of the candle. In one candle, it did like 3 million shares alone in five look at that. Or sorry, 1 million shares in a 1 minute candle in 5 cent ranges. So insane volume coming in over there on NIO going into the close. I guess when a stock does that much volume, you kind of don't want to ignore what happens. So let me spin up trade ideas. I want to spin up trade ideas and I want to anchor VWAP from that volume point. See what happens from that volume point going into tomorrow, and hopefully it gets saved onto my charts. New chart window. Let's go over here. NIO. We'll go to the 1 minute. Zoom out a bit. Get that out of my face. Zoom back in. Oh, so that's how it works. Okay. Zoom back in. Okay. And then put the anchor VWAP off of that volume candle low. You guys see that? Oh, wait. That's not the VWAP. Okay. So that's the VWAP right there. But why does it go so flat? It's almost like it's not considering the after hour move at all. It's not considering the after hour volume at all. I wanted to consider the after hour volume. I guess I'm going to have to repaint it tomorrow to see if it's going to recalculate the after hour volume, because I want to anchor it off that point. If a stock did that much volume going into the close, that looks like a pretty important area to me. So either looking for longs off of that. The stock will be on SSR day 2 tomorrow. What was the price that they did a price offering at? If you guys can help me out on that one. Actually, I don't need your help. I got Benzinga to help me. So let's go to Benzinga to see what's happening over here. So shout out to Benzinga once again. For anyone who wants to sign up to Benzinga, make sure you go click on the links below in the description and you will be able to do so exactly with my links. After the close on Monday, proposed 500 million convertible senior notes due 2023, 75 million. Okay. Yeah, there you go. Just more dilution. And 975. Oh, we're down 5%. Okay. Down 50% over 1 year period. Is it? Yeah, it is. Yikes. From $21 to $9. 21. Can you do something for me? So pretty insane moved over here. I mean, we were calling the shorts from this level to these levels, but we didn't expect it to happen overnight of such a big gap down and kind of break down more levels to the downside. So 52-week low. Where is that 52-week low? Near $7. SSR bounce possibly incoming around these lows over here that we made today near 850. I would be watching that area once again for possible bounces on NIO. And Li Auto, I mean, basically held that range, did nothing, held that range. If for any reason Li Auto wants to break that low, I want to be part of it. That 38 area is what I'm basically looking for. 38 area, 38 price is basically what I'm looking for on Li Auto. So I might just go over here, put it on Li Auto, and just kind of separate these tickers. $38 area is kind of what I want to basically short if it gets through that. And if I see buyers and if there's volume on the stock and the RVOL is doing fine, I'll kind of get long on that too. I don't mind doing that. Tesla. Tesla, I mean, I don't think you really want to be trading these large cap stocks right now unless they're, you know, really in play. I don't think Tesla was, maybe it was. Yeah, I don't know. I don't think Tesla was really in play today. I think Apple was more in play, if anything. That opening 5 minute candle is insane. That opening 5 minute candle is insane. Holy snikes. Yeah, I mean, I think a more in play stock today was Apple. And I say that because it was cleaner. It wasn't just chop fest. Yeah, it chopped you up on the open first, but then it went down, held that nice little triple bottom, moved up for an insane reversal. Um, this one chopped you up a bit. Amazon was a little bit cleaner. It just moved straight down and then moved straight up, right? You would not have known this at that moment, but you could have seen the stocks that gap down more in the tech basket than the others. So Apple was clearly showing you that move to the upside. Amazon was clearly showing you that move to the downside. The other stocks, not so much. They just chopped around as the market kind of chopped around off the open too, right? Market chopped off of the open, sold off, and then later on bounced. So I don't know if you really want to be attacking these large cap stocks going into an FOMC day. You might want to be stepping back and just waiting for FOMC week to kind of finish itself, and then the FOMC day to play out, and then see where the moves are going. And on that note, I think we go to the next stock, BTE. What is BTE? Apparently it made a lot of volume today. 34 million shares traded today for some reason, whereas its average volume is only 9 million shares, 10 million shares. Moved down quite a bit. Yeah, pretty decent spike in volume, but looks like it's moving right back into these ranges again. So if there is volume again tomorrow, I might be interested to keep the stock on the watch list. Baytex Energy, an oil stock. Ooh, an oil stock. Obviously, oil sector has been quite a bit in play recently as crude futures keep moving around. Where are crude futures right now? CL down on the day about almost a full percent. Right back into these ranges again. What? We were looking for crude around these ranges. I thought crude was going to go to $80. Isn't that what analysts said they were going to go to? Don't know what happened to that one. But yeah, eventually moving back to the downside. I thought Saudi was also messing with oil production, and crude was going to pop up and oil was going crazy or whatever, right? XLE was kind of rallying. So what happened to crude over there? Crude kind of got destroyed. End of the day though, BTE popping up on our scanners, popping up on our on the Yahoo scanners over here. Might be something to keep on the watch. We are actually right at these peaks that we previously had kind of resistances off of. So those peaks could show you supports, but if I'm interested, I'm possibly only interested on the $4 area for BTE. So I'll just put down 4 on my watch list over here. Intel did have some sort of an event today. I don't know what the event was. But yeah, Intel had some sort of an event today, sold off completely. Monster sell off. I usually don't like to trade stocks that are having, you know, a big catalyst such as an event, because it could have a monster move either direction, and you can get trapped out, and the liquidity just kind of runs away from you, where you don't really have a good out, and you get slipped on trades like these. So I try to stay away from it, let it play out, let it show you the moves, and then you can kind of get in on the next day. Looks like the market did not like what Intel had to say about their event, and instant sell-off. That $40 high was something that we were pretty interested in. $38, $80, $39, clearly showing a nice little move. That looks like the perfect entry. That's the right side of the V, right? The same price have different expected value. If you are short right here on Intel as a swing trader, you are probably like, yeah, I'm in the money $1. Now you're out of the money $1, right? But if you just waited for this move to happen and got short over here instead, and your stop is $1, not only are you in the money $1 or $2, you could probably have more to the downside by only risking $1 on that position. This applies to intraday trading as well. You can just go to the intraday trade right here. Instead of shorting it on the move back over here or blindly placing an order at 37.57 just because it had that pop there, you let the stock trade through that area, right? Trade through that area, and then once you see the exhaustions kind of come in, we're not able to lift higher than 37.66. 37.66 will show you on the tape. Trust me, the tape will be very, very obvious. You will see buyers not being able to push the stock higher. Sellers are coming back in, and this is probably where you re-enter on that position. You like that 37.57 price before, you like it again. Now your risk is just that high. 37.66 is your high. Previously, if you got it over here, it goes a little bit higher. You don't know where to stop yourself. Maybe you put your stop over here. You don't get stopped out. But, usually traders kind of get stopped out, chopped up in these ranges. You get back in these moves to the back down. You have the same price. Your expected value now is much higher. Your win rate's higher. Your probability of catching the 3R move is higher now. And you get that monster move to the downside. Whoever is DMing me, screw off. It's a DLB. What you want, DLB? Okay, I get it. So we are getting a nice little short off of that one to the downside over here off that move. So I mean, it applies to intraday trading too. It applies to swing trading too. It's just a basic concept that, oh man, look at this insane thumbnail. Let's go to Lance's Twitter real quick just to show you that. What post? Lance, you took away the post. Lance pinned something else on the post. Okay, I gotta look at whatever this one is because I have to find that one. Right side of the V, and you'll find it right there. So right side of the V, the same price at different times can yield different expected value. So same price at different times can yield different expected value. And over here too, look at that. Let it trade out. You're seeing it not really push up there. You probably punch in over here, not here. I mean, you could if you want to and give it that risk over here or give it that risk over here if you want. But technically, you want to be punching here and giving the risk up to here. Punch here, give the risk up to here, ride that move back to the downside. So that's sound trading. The old Prad would have been short, chop, give back all the money that he made on the original move down, and then cry about how he was right on the day but did not catch the move, right? This is exactly how we're trying to improve and get better. Intel though had an event of some sorts, moved down quite a bit tomorrow with FOMC. I think I want to be careful trading any of the large cap stocks. I think Intel could give you a bigger move to the downside, right back into the 100 period EMA and a 50 period EMA. If you are looking for those shorts, we have pretty clean levels on the stock to watch out for, and I'll be interested to see if those levels come back into play. Apple almost went up to 180. It's not saying I'm going to be trading it, but if Apple does go into 180 tomorrow before FOMC and starts showing you a lot of strength before FOMC for some reason, that could be the only real trade that you wanna be partaking in for a large cap stock. But I will still be very careful. It'll probably show you exhaustions at 180, 180, 50, and possibly get short in front of that and go back to the downside before FOMC. That's what I'm expecting. But it's better to participate than anticipate. You guys know that always. Disney fell over 3 points, spending on Parks to increase. Yeah, I saw that Parks catalyst. UAW strike means Ford and GM stocks are shorts until strike ends. Yeah, that makes sense. Prad, can you please comment on AMD, please? 100%, brother. I was just... that's surprising. The next stock was actually AMD after Apple. Let me just quickly grab a sip of water. My mouth is going dry. All right. Whew. AMD, I kept saying the stock is actually a stock to not trade at the moment because it's just like kind of choppy, really ugly, and doing weird things. But yesterday, the $100 area was something to watch out for. AMD 100, a very key level, very significant psychological level, if you can understand what I mean by that. You know, a lot of simple traders, I'm sorry if I say that, but smooth brain, simple traders, normal traders, retail traders, dumb money, right? They like to look at these even dollar prices, and especially when a significant even dollar price as 100 pops up, they like to price their levels, their orders, their stops at this price. So those key levels like 100, 120, 150, 200 on stocks like Amazon, Google, Apple, they all matter because there's a lot of dumb liquidity around these prices. And what would smart liquidity try to do with dumb liquidity around said prices? They want to trap them. They want to trap the longs, they want to trap the shorts, they want to burn the long stops, they want to burn the short stops, take their money and then flip their positions and make money at the end of the day, both directions, right? So we want to follow that flow. We want to follow where the big money, the whales are, and not the people who are getting trapped, because you don't want to get trapped at the end of the day. So understanding that whole concept is very key, and that was part of the reason why I didn't want to really trade AMD for the last few days for a day trader. For a swing trader though, you're loving it. You're shorting the pops and you're just riding the stock as it continues to make lower lows and lower highs. You're loving it. Now coming back to a day trader's perspective, because that's what we are, I still think the stock is basically kind of no touch at the moment, along with the other stocks for the same basket in the big tech. An inside day today. I'm expecting another inside day tomorrow. We did bounce shy off of 170 is where we bounced off of, but tomorrow possibly we move right back below 100 and bounce again off of this 99.50. I wouldn't doubt it. And nor am I excited for that trade tomorrow, because tomorrow FOMC might be just juicing up the stocks or taking the juice out of some of these stocks. So there will be other trades on there that will be much cleaner in my opinion, honestly, until AMD kind of takes out this 100 properly and trades below 100 later on in the day. Then I won't be interested. I think it has to show me a lot of volume and relative volume increase, and actually a catalyst behind it for me to actually trade it. Right now it doesn't really show me anything like that. So for a day trade, I'm gonna stay off for it. Ford, as our friend TH just mentioned, Ford and GM are continuously shorts on any pops for day trades or for swing trades. I guess it did have a 1.78% pop today, but until that strike ends, basically you're looking for shorts on the stock. Today it had a pop, I guess. Yeah, intraday, no shorts on pops. No shorts on pop intradays on this stock, because you are just getting burnt on that one. This day I actually had the shorts on. I think it was, I guess, Monday, right? Yeah, yesterday. We had the shorts over here on the highs, and we actually rode it to the downside. We enjoyed it, but yeah, we kind of ignored it on both of these days. I guess that's Friday. Yeah, that was Friday. We shorted that day for sure. We ignored it yesterday. We ignored it today. I think I'm just gonna continue ignoring Ford and GM as it continues to stay in these boring ranges. Give me a move down to 12 and the move break of 12 and a move all the way down to like $11.50, $11 or something, or a pop back up to 13 and being able to short 13. I don't really want to trade in between these ranges. Let those ranges trade out and people get chopped up in that. So I'm actually going to remove Ford from my watch list over there and move on to the next one, which is Nvidia. Nvidia actually moved quite a bit a couple of days ago, but today I guess was just an inside day. I mean, this day was insane rally. Started off down in pre-market and then turned positive on the day. We were pretty surprised by that. But today basically an inside day. Didn't really happen. Didn't really do too much. The volatility was sucked out of it. Only a 10-day range, whereas, you know, this day was like a $20, $30 day range on Nvidia. So I think tomorrow's prediction kind of expecting the same thing, a little bit muted, not really expecting anything out of this one with FOMC. So don't want to waste too much time on this, and we'll start with some of these stocks where we can actually find a place tomorrow. So these are kind of like on the back burner watch list. So we'll just copy that one and we'll move it to the downside over here and move it to the other watch list. This is the main watch list where we want to be involved in. Carvana, that 46 area bounce, monster bounce off of that 46. If for any reason Carvana pops back up to these lows of 48, 49s and shows us rejections, you could be interested in possibly shorting those levels. We have a line right here at 48.50. I'll be honest with you, I don't know where the hell that line comes from. So we might have to pull this chart a little bit back. That comes from that peak over there and a little bit consolidation right there. And ever since then, the stock kind of pushed to, new lows, new lows, new lows, popped right back into that peak's high, and then struggled to really get past that peak of $58 pretty much. Never really got back above that $58 peak. We have this level over here near $53. We were looking at that $53 area. This $46 triple bottom. 1, 2, 3, triple bottom now coming in. Clearly showing you that there's some sort of a buying action coming in off that level. If for any reason we dip under 46 tomorrow on Carvana, look how much of a room you have for how tight of a risk you can give it, right? Hoping that stock gives you that break off of pre-market, you short it off the pre-market break, you'd ride it to the downside, enjoy that move up to $43 or so, or even more, and print that paper, baby. Print that paper. So 46 for either shorts or a fail break long. That's also a possibility. Not sure if the stock actually triggered SSR today or not. It might have triggered SSR. Don't quote me. Don't quote me, but it might have triggered SSR. Rivian is only being on my watch list or being put on my watch list because my manager said that it's very active every single day and it's around important key levels. I mean, I'm not really seeing it. I guess he has to kind of hammer it down to me a little bit. I guess he's talking about these levels. Yeah, I mean, it makes sense. Yeah, these highs, the stock consolidated in that range for a little bit and then popped up and then found support, popped up. We popped back into these ranges, found resistance, popped back down, popped back up again off of that low today off of $22. A fail break of 22 basically gave you a 70-cent reward for a 20-cent risk. So pretty decent reward over there off of that fail break. Look at that. And it actually went above VWAP. So look at that monster move. You could have basically gone long here and had that risk there, gone stopped out. That's okay. It doesn't work 100% of the time, right? You only need a 40% win rate. So you could have gone long somewhere over here, stop over here, gotten stopped out, but you could have also gotten back in and had a stop over here, and that would have made you a profitable trade off of that loss already. So just to show again the concept of being on the right side of the V. Very, very important concept. Something that I'm actually trying to hammer down my own throat, my own mind. So I keep looking for reasons to get into a position, and the only reason I get into a position if it's on the right side of the V. That way I don't have to worry about my entry. I don't have to worry about my stop. The only thing I have to worry about is my paper hands because I take profits way too damn early. Yeah, so I guess that $22 area is something to keep an eye out for, and this $23 to $24 area is something to keep an eye out for. $23.50 to $24. So 22, and then we'll put comma 23.50/24 on Rivian. Disney had pretty good catalyst recently. What was that? What was the recent catalyst on Disney? I'm looking at Discord over here. Let's move Discord and go back to chat. Okay, we got chat a little bit more active. Sorry, chat. What's crack-a-lack fam, says Jose. What's up, Jose? That's good, man. We're good. We're living life, living life. Will you ever consider trading live? Miss your live plays Pratty. No, sir. I will probably not consider trading live until, I don't know when, but for a long time. Long time. I don't see the advantage in trading live. I'm sorry. It just doesn't make sense. It doesn't make sense. Trading is supposed to be boring. Okay? It's supposed to be boring. And also you're not supposed to really bring in emotions or actions. And if I'm going live, I kind of want, to to be me, to have fun with the chat, to entertain, and then the job becomes, am I an entertainer or am I a trader? Right? So I love entertaining people, don't get me wrong, and it's part of the reason why I go live, not just because I like to talk about the stock market. I like to entertain people, I like to have fun. So at that point, if I'm trading live, it's almost like I'm not a trader anymore, I'm an entertainer. And that's what happened with Trader TV Live. Before Trader TV Live, I was a trader, I was making money trading. Ever since Trader TV Live, I haven't made a single dollar, because it was just like nonstop entertainment, trying to put on a show, having other people tell me that the show is the only way to make money and trading isn't. Having other people, we're not going to take names, but having other people tell me that the show is the only way to make money, keep being an entertainer, don't worry about your trading, and keep entertaining, and we got your back. We got your back, bro. Right? Look what happened, right? So at the end of the day, man, I don't see any advantage in trading live. It's not entertaining. Trading is not entertaining. Trading is supposed to be boring. It's supposed to be a business. It's supposed to be a job. You can love your job, don't get me wrong. I love my job. I love trading. I love looking at the market. I have a smile through it, even through losses, because I'm learning about it. But it's not something to do along with other things. It's something that you're going to focus, put your heart and mind and soul to it, and either you can do good or you just fail and you move on. So that's the story of it. The show is great, don't get me wrong. The show is great, but it's entertainment. It's entertainment. There's education in there too. You learn a lot of great things. And that's shout out to Neil, right? The shout out to Neil, shout out to everybody else on there. So you learn a lot of great things, but for me, that's entertainment. And I am no longer interested in that business. At least from 9:30 till 4 o'clock. I'm not an entertainer from 9:30 till 4 o'clock. I am a trader from 9:30 till 4 o'clock. And that's my job. All right. Sorry to hear, but we miss you. You're good, man. I'm just explaining as to how I feel with everything that happened, and where I am right now with my mental, with my trading, where my goals are, where I want to be in life, and the things I need to do to be where I want to be. And I'm nowhere close to where I want to be. I'm damn near 30 years old, and I'm nowhere where I want to be. So doing that was fun. Learned a lot from it. I mean, you don't get amazing thumbnails like this without that job that I had, right? So amazing thumbnails like this where my Photoshop skills are really being put to test. I mean, if you're not giving a like and subscribe for these thumbnails that I'm pumping out for you guys, I don't know what else to say. I don't know what else to say. And some banger trades along with it, and some banger trade reviews with it. I mean, come on. What else do you guys want from me? What else do you want from me? Sorry to hear. I already read that. I legit joined because of the thumbnail. Hey, let's go, Robo. Welcome. If you are new to the chat, welcome. Legit joined because of the thumbnail. That's hilarious. Hey, it works. There you go. We got the goal. The goal has been achieved. Let's go. All right. As we are running out of time, guys, let's start quick running through these last few stocks over here. Stop wasting time because I do have to eat dinner. I do have to walk my dog, okay? So Disney is obviously, recent catalyst was, I think, ABC selling off to NXZT, if that ticker is correct. Don't quote me on that ticker. It popped up to the previous 52-week low, rejected that 50-period EMA, and sold right off. Obviously, this catalyst was a little bit different because they are thinking about spending more money in a high inflationary period and put that money into parks and recreations, which I believe was actually the only sector that made money on their earnings report. Their Disney Plus sector was losing money. Their other sectors were losing money, and with that strike that's going on in the film industry, Disney Plus looks a little bit more scary right now as a investment side. But parks and recreations, if I believe, was the only sector that made money. So they just basically are doubling down on that sector, I guess, to invest more on that. If that's the golden goose, then kind of keep your golden goose alive. Makes sense to me. The market clearly did not like them spending the money that they were going to, so they sold off a little bit. A little bit was under exaggeration, I guess, because they sold off quite a bit, 3.6% to the downside, right back into these ranges highs. Possible support to come in around these lows or these highs. So let's quickly throw in a nice little box there. So possible supports to come in, even though we kind of moved under that range today, right? So possible supports / resistances to come in around these ranges. So look out for that $82 to 81.90, yeah, $81.90 to $82 for possible rejections, or the stock gets back above it, shows you support, and you can look for possible longs off of that area. So 82 on Disney looks pretty interesting to me. My stomach is rumbling in the jungle. I need some more water so I can calm my water down, dude, or my stomach down. I only had one meal today, chat. I'm starving. The things I do for you guys. I'm tired. I'm so tired. Why am I complaining? Not like you guys asked for this, okay? You guys didn't ask for this, but I'm glad you guys come. All 15 people of you watching right now, especially TH, because he's in here every single day. Shout out to TH. Pinterest popped up on the scanner today. I think it was a volume scanner, and yeah, big volume spike on the day today. Not sure what the catalyst was. What was the catalyst? Accelerated revenue growth forecast. Okay, shout out to you on that accelerated revenue growth forecast for popping 3.19% to the upside, but looks like right back into this box that we've been interested in seeing what happens on the stock. I guess I'll still continue watching that price around this $27 or so, or this low of $25.50. See if supports pop back in around $25.50 on Pinterest. My phone has been going off non-stop. What's going on here? No girls are messaging me, so who's messaging me? Pinterest over here is Pinterest over here is obviously, you know, holding off to the downside currently, not really pushing too much to the downside, and a nice little pop coming in. I think if there is more volume in the stock tomorrow, is something to not ignore, but I'm not too happy with the choppiness of this area. Very, very choppy of this area. So I guess just have to watch it closely. Right now, the 50 period EMA and the 100 period EMA kind of showing you where possible rejections could show up, because the stock's tail is kind of around those prices and the body ends right at 26.20. So shows you where liquidity kind of stayed around on the day today. Nowhere above 26.20 did the liquidity really play around. Don't see any levels that I'm too interested in, but I'll have it on my watch list just to flip through the stocks in case this one brings in volume tomorrow. CCL, we traded this one today. We talked about it, so I'll just skip through this one real quick. Very important level over here, this $15 consolidation. They got an upgrade. The upgrade was by some random no-name company, a company that no one's ever heard of, but this 15 to 14.90 area looks pretty interesting to me. I'll look for supports to build in for another possible long on that tomorrow, or you know, in the next few days, or a possible short on the breakthrough off that level. Today was a pretty poor trading on CCL for myself. Let's go to RCL, which is sadly a little bit less volume than CCL. That's why I didn't really trade it today. Shows you kind of the same consolidation range. Look at that consolidation area and the rejection basically of that 99.50 to 99.20. So almost 100 basically. So RCL, you can look for shorts anywhere from 99.50 to 100, or even from 99.20 to 100 area, and look for a possible move down, but wait for R vol to pick up. Please please wait for RVol to pick up and volume to actually have in the stock, because there's nothing going on at the moment. And the catalyst was positive. So maybe not look for shorts, but look for longs. Look for longs through that 100. Look for longs through that 99.50 if there is volume and if there is high RVol. If there is neither of those, don't get trapped into CCL or RCL the way I did today. So I'm just going to put down this price point over here, 99.50 to 100 for myself. Going to one of the recent IPOs from today, recent IPOs from this week, or sorry, last week. Was ARM last week? Yeah, last week. ARM. Still around that $55 price. We talked about it briefly as we did trade it today. The low of 54 held pretty strongly. That was a fail break of 54. I think only 53.88. Yeah, 53.88 was the low of the day, and we just popped right back to 54, moving back to 55. So you'll have to keep watching this 55, 58. And the new all-time low, I guess, right? The new all-time low at $54. Just have to put that one on there too. I don't really want to put it on there because I kind of know what the price is, but I'm just gonna put it on there for you guys. So watch these levels on ARM IPO, which is this $58 price point. Look how it kind of rejects that in the after hours yesterday. Pre-market doesn't really pull up to 58, and then 55 over here, which was the low on these 2 days, breaks eventually today and shows you a nice little short, and then traps people at the 54 area. So those are the levels on ARM. Let's go to the next IPO, CART. What a shit show. Absolute shit show on the stock. We thought this one would, run up to the north side. There was absolutely no run up at all. It was just a straight clean rundown. The opening range 5-minute break gave me a beautiful short to the downside. I pretty much got out around these ranges. What a poor paper-handed trader I am, because later on in the day it pushes down to $32. Holy smokes. So I'm just gonna pin all these lows over here just to be interested in the future. And I'll always have those lines, right? I'll always have these lines out, and I don't have to worry about it. So I'm just going to put these lines over here for myself. Also put one down for the after hour low, and now we are prepared. And I'm going to put one down for that high of that body, and also going to put one down over here at 42, because clearly it struggled to really push above $42 on both of these 5-minute moves. So I'm going to put these levels over here for myself on the stock. That 40 level was pretty damn important too. So we got all these levels mapped out, and tomorrow if the stock pops anywhere around these levels, all we're doing is studying the tape, and waiting to be on the right side of the V, right? You are studying the tape, letting the stock trade, letting the formations happen, and you are simply looking to be on the right side of the V. Let it be long, let it be short, whatever. However, I do think the stock has more move to the downside. The IPO price range was $28 to $30. I think you will see some size, which we did not see today. There was a clear lack of size on the bids today. If we do see any size on the bids tomorrow, there could be some opportunities to get long, but sadly the stock only did 35 million shares today, 39 million shares today, whereas ARM did 100 million shares on the day one. So it is a very, very big chance that the stock's volume gets absolutely murdered tomorrow. Good to have on watch, but there's a big chance this one's volume just gets absolutely murdered. Square. Square, why did you pop up on the watch list? Oh yeah, new 52-week low on Square. It was getting sold off in pre-market. Big sell-off in pre-market and off the open. And I guess this over here after hour sell-off was the one that kind of triggered everything, or even the yesterday sell-off kind of triggered everything. Getting to a new 52-week low now. Pretty insane move. We were so bullish on Square pretty much around these prices. We were talking about it on Trader TV Live when we used to work there, but that we missed out on that long. We wanted to get options. Max and I, we both wanted to get long options, and we missed out on that move. I guess we got another chance to get that call. Overall, I guess the catalyst for this one is the CEO stepping down. Is that true? Yeah. CEO stepping down, and Jack Dorsey is taking over. I thought Jack Dorsey was already the CEO. Is he just the founder? So Jack Dorsey is taking over. I guess the market doesn't really like that, because Jack Dorsey, obviously, you guys You guys know Jack Dorsey. I'll just leave it at that statement. Yeah, market not really liking that statement, and now Square block is what I should technically call it, not Square. Sorry, is obviously pushing much farther to the downside. Let's see what chat's saying. What about Bitcoin? I don't really trade Bitcoin, mate. I don't really trade Bitcoin, but I'll give you a quick outlook on Bitcoin, what I think about it. This was the breakout that I was looking for on Bitcoin. We did get that breakout. Sadly, we got that breakdown right back to these levels over here. Now we're just waiting for the Bitcoin to get back above 30K, honestly. I'm not too interested in this middle price point area. I guess you would be if you are a Bitcoin trader. I'm not, right? What stands out to me is this clear rejection at the moment of the 100 period EMA. Look at the 100 period EMA rejecting, and we also have a moving average crossover. The last time the moving average crossed over on the daily chart was January of 2023, signaling a bull rally incoming. And boy, were they right? Signaling a bull rally incoming. We moved insanely up to 30K, but now we are getting a moving average crossover where the 100 period EMA is to the higher side and the 50 average moving average EMA is to the downside. So it is a little bit of a bearish indication, but the EMAs are curling up. So it is possible that the EMAs could cross over again and show us another possible bull rally. This is just technical analysis. We're just looking at the chart. We're not looking at other factors such as, whatever Kathy Wood thinks about Bitcoin. She thinks Bitcoin's going up to $500,000. Hey, I want it to go to $500,000 because that means I can finally move out of my mom's house and go live in a penthouse somewhere, right? So I would love that, but I can't predict things like that. All I can do is give you trade ideas off of technical analysis and levels. Currently, this chart formation looks pretty amazing to me. We are seeing buyers come back in multiple times, and they are fighting for prices. They are holding these prices up, but we are also seeing sellers basically fight for the price too. We're seeing sellers come in at lower and lower prices. Technically, you want to see sellers waiting at the higher end of the prices, letting the move happen, getting their shorts at the higher end of the prices, and then move the stock down to the demand areas. But if supply is moving down, then there's a good chance that demand moves down too. So you want to be careful. That moving average crossover is pretty key in my opinion, but there's a possibility that the moving average crossover happens again, and currently we are seeing a nice exhaustion or resistance exactly at the 50 period EMA, as you can see that right around over here. So the 100 period EMA, as you can see that on the daily chart. I would love for a move up to the north side on Bitcoin. Bitcoin move obviously gives us trades on Riot, MARA, and Coinbase, something that we haven't looked at in a long time. Coinbase, that $84 or $87 once again. I mean, come on, gotta put that one on the watch list. I keep forgetting about Coinbase. Coinbase, $87, and looks like this area, not sure why I'm interested in that area. Why am I interested in that area? I guess that high and the stock closed around it. No, I'm not interested in that area. So we'll just leave it at 87. Riot, we got that $10 area to watch out for on Riot. I put 19, 10, hello. Mara, which sadly does a little bit less volume than Riot, I believe. Yo, what? Riot does less volume than Mara? I'm surprised. Okay, Mara does more volume than Riot. And we got a level over here near $9 to $8.50 or so to watch out for. Possible supports that can come in. Obviously, Bitcoin's going up right now, so you could possibly see supports and buying coming in around $9 to $8.50 on these stocks. Okay, Square, brand new 52-week low coming in. There could be more selling. I'd be careful. I think I would let the stock kind of figure out what it wants to do. Maybe it shows you some rejection around 50, but yeah, have it on the watch list. Don't ignore it. Keep it on the watch list for sure, and see if some trades show up for us tomorrow. Affirm has been on a monster rally recently, especially off of that earnings report. Look at that volume on that earnings day, 86 million shares, monster rally on Affirm. But I don't really see a level that I want to be interested in right now, I'll be honest. Maybe if it pulls back into 22, I guess 23 could be something to watch out for. Yeah, I'm not really seeing anything on a firm too important for myself. Nah, I don't see anything. Let's go to DKNG. DKNG popped up on the scanner today to the downside scanner. I think this was on the Yahoo scanners over here for the downside moves. Most volume traded to the downside stocks. Looks like that level is right back in play, that $30 area. So obviously we got to watch that area. We popped up into that range recently. We broke back under, we got back under, we found some support, and now we're testing that level one more time. So if the stock does get back under $30, you could possibly see some good short moves on it. And if $30 shows you some support, you can have some nice longs off of that area too. So DKNG, gotta keep that on watch. Let's go, ladies and gentlemen. We did it. We walked through the whole watch list. Now the only other thing we have over here is something that I need to apparently start watching. What is this? ADD. You guys know about this? NYSE ADV minus decline. So this is the stocks that are going up and down in the New York in a minute. Let me copy that, please. Okay, what is this? What is Advanced Decline Index? Advanced Decline Index is a market breadth indicator that represents the cumulative difference between the number of advancing and declining stocks within a given index. A rising AD index value suggests that the market is gaining momentum, whereas a falling value suggests that the market may be losing momentum. The Advanced Decline Index is also called the Advanced Decline Line, or the AD line, or line index or line. It is used to help confirm the current stock index trend or can forewarn of stock index reversals. When the AD index diverges with the stock index direction, this indicator can be calculated in any time frame but is calculated primarily from daily statistics. Okay, key takeaways. A rising AD index helps confirms a rising stock index and shows strength because more stocks are rising than falling. A falling AD index is basically the opposite of that. A rising stock index within a falling advanced decline is a bearish divergence and indicates that the stock market rise is losing steam since fewer stocks are participating in the rise. That makes sense. A falling stock, yeah, obviously on the opposite side of that, the formula, blah, 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 how to calculate. We don't need to calculate that because there's a stock on the market for us to take a look at. Okay. That's learning new things, chat. Learning new things. So if the market's going up and this is going up too, then it kind of shows you that the stock or the sector, the market has strength behind it. A lot of the stocks are going up. But if this is going up and the market's going down, you kind of get an idea that, hey, the market might be losing steam and it might be start looking for some shorts and so on, and vice versa for the longs over here. You can kind of time the longs and shorts in the market, in the big tech and other stocks in general too. So another barometer over here to add to our tool of stocks to trade and so on. Stocks to trade, tools of things to use and when we're trying to time reversals, when we're trying to time trades. So pretty good over here. I think I'll have to start putting this on my watch list a little bit more. I like it. ADD for anyone else interested. Last but not least, ladies and gentlemen, we do have the FOMC tomorrow. Once again, 99% probability that there will not be a rate hike tomorrow. So we'll just have to wait and see until 2 o'clock if Papa Powell comes knocking on the door with a random surprise rate hike, which will obviously crash the market. Or maybe I shouldn't say obviously, but I think it will crash the market. But I'll be pretty surprised if it doesn't. Or will Papa Powell come in and say we get a pause and then another rate hike, which was in the words that he wants to say, right? I think he wants to say another rate hike because he has been talking about it for so long now, since July, I think. So if this one's going to be a pause, I think the market will want to hear another rate hike coming soon, just because they kind of priced in for it. But what happens if he says we are not hiking rates anymore? That's it, we're done, and then we're gonna start looking for cuts. I know that's not in the picture, but it's a possibility. You just have to be ready for anything, right? You have to be ready for all the scenarios, all the possibilities, and be ready for that trades. That way you're not caught off guard. So create all the scenarios, create all the possibilities in your head, and be ready for those trades because they will show up at any moment, and your job is to be ready for them. 2 o'clock, can't wait for it. 2:30, we have another move coming because Papa Powell will be on the podium answering the media questions and moving around the market. Any other important thing coming up tomorrow on the calendar? I guess we do have the crude oil inventories for you oil traders. So watch out for that 1030 number. Nothing else besides that on the board. And last but not least, please go check out all my social media links and my affiliate sponsors, Trade Ideas, TraderSync, Benzinga. They help me trade the best and help me be the best TraderPrad I can be. And I'm sure they can help you unlock the best trader you want to be too. So ladies and gentlemen, thank you for coming for the last hour and a half of this show. We will be back again tomorrow with an amazing thumbnail. Trust me, tomorrow's thumbnail probably better than this one. So stay tuned. Come back tomorrow. If you haven't hit the like or subscribe yet, do hit it. And share this with your friends and family because I need more subscribers and I need more watch hours so I can start getting monetization on this. So help your boy TraderPrad. Have a great night. Have a better trading day. Catch you guys at 8 o'clock. Same time, same place. Peace.